Good morning all, and welcome to another weekly outlook on the Forex market. We'll see what the outlook is looking like for this coming week. Now, just in review of last week, we had a rather big push up here. You can see that we actually just broke the all-time highs on gold at $2,078. $2,078 per ounce of gold, and that was a huge push up as a result of the news that we had at the back end of last week. Now, looking ahead to this week, first of all, now you can see we had a big rejection down there. Like I mentioned last week, you to trade above this level and sustain this level, it basically never happens unless you have a major catalyst that's going to take place in the world. Now, obviously, we've had bank failures, we've had COVID, we've had financial crashes and so on. So COVID was this main one. Looking back at 2020 here, March 2022 was the invasion of Ukraine by Russia. And then, we're kind of looking around here, and this is where we've got all the banking crisis going on and gold being a safe haven and so on. Now, if you read into that a little bit more, what you'll actually notice as well is that I think it was JP Morgan are in a gold short position, and they've been in a short position. Now, it's just curious that the gold went up to 2078, so it broke all-time highs, and all of a sudden, you've got one of the biggest banks in the world that are in a huge short position, in a short position that actually outweighs all of their assets combined. So obviously, bear in mind that that's just dropped somewhere in the region of about 600 pips or something in that time. That's kind of where gold's looking at the moment. So gold is in a funny position because we have it where it's still being a safe haven at the moment, and that's the need for that and desire for that is quite strong at present. But on the flip side of that, we also have the US dollar, inflation rates, it's getting higher, interest rates are being raised, and the US dollar domination is still very much a thing. So what we're actually going to see is you're going to see the stock market likely drop a little bit. That's going to be coming down. Dollar domination is going to be taking place. We may see a push to the downside on gold, and then a rather quick push back up as it's been a safe haven at the same time. That's what we are likely to see over the coming weeks. So keep your eyes peeled for that. Now, this week we have got CPI news. Now, all of the data, the job retentions, the job opportunities, the interest rates, etc., everything is all going in the dollar's favor at the moment, and that's why I've just made the statement I have, that the stock markets will come down. That is almost a guarantee. The gold will come down and then will rebound and come back up again because it's a safe haven. And that's probably what we're looking at over the coming couple of weeks or so. Okay, so now let's get into it. We can see on the weekly that we've got this sort of triple top rejection there. Absolutely no surprise whatsoever. We'll just dive down a little bit more and look at it on the daily first of all. So on the daily, kind of looking at what took place last week. Obviously, we've got this sort of rejection area just to the top here where we've closed below and we haven't actually managed to close above. Just going back in time again, look at that, just by chance or not, we haven't managed to close above it there. And if we go back towards 2022, we got one daily closure above it and then a bearish engulfing candle straight back to the downside. So that looks like a pretty safe area of rejection from there to base our analysis on for the time being. Now, obviously, we've just opened up this this new daily candle from today. This opened at 11 p.m. last night UK time. So we're just trying to kind of get a quick analysis in and see what's what for the coming week. Now, if we break that down a little bit further, what you'll notice here is we've got this area of support and resistance just here. So it formed resistance there, it formed support at this point, and then we managed to break through there. It was once again resistance, and it's used as support to push off in that direction of Wednesday last week, again when we had news coming, remember. And up to that point, prior to that, we had quite a bit of ranging going on, didn't we? And that was in anticipation of the big news push that we got towards the back end of last week. Now we find ourselves back in this area with no real clear direction at the moment. Obviously, we have this big bearish engulfing candle on Friday, which was NFP data coming out, and once again that was very much in favour of the US dollar. So looking on the 4 hour at this point, our zones look pretty clean and crisp, which is great. And you can see again, if we just try and kind of break that down just a little bit more, we've got this little zone here which we broke through, and it looks like we're trying to kind of push back up a little bit at the moment. Now bear in mind, we have got the CPI news coming a little later this week, so a lot of the movement on gold will be waiting on that. We've had next to no volume, if we look on the hourly here, next to no volume this morning, UK time, because it's a Euro and GBP bank holiday today. So we're very much at the process at the moment of waiting to give us a little bit more clearer push and clearer direction to see what is what for the coming rest of the day and into the start of the week. And again, if we just broke that down a little bit more, we can see a nice little clean zone there. We've kind of formed a nice little intraday range here. So we can see if we get a little break to the upside, that'll probably be nice and clean, and we'll probably see some grabs. So if we can just break above there, we'll probably see some grabs coming to the upside a little bit later on, maybe today, maybe come Tuesday, depending on what the volume is like, with London not trading today. And then again, if we get a little break to the downside, really for clean pushes, let's just have a little look. In terms of clean pushes there, to the downside, you've kind of got this area of sort of support around the sort of 2012 area. So for me, I would be looking for a little break of 2012 to then push down and fill that zone down towards 2004. That's pretty much what I'd be looking for over the next day or so. In terms of the rest of the week, we'll have to see kind of what impact news has on us. I think in terms of news, being brutally honest with you, if I just come to the 4 hour for a second, I think what's likely to happen is news could come down maybe towards the sort of like 2075 area. We could push even lower than that, so if we just zoom out a little bit more and just kind of see what area of support we've got. We've got around 2037. That's probably 1937, and then we've probably got down towards 1925. So it wouldn't be impossible to say we might get a push all the way down there, and I think we will quickly retrace that and come back up as people jump to gold being that safe haven as we mentioned at the start. So that's my initial outlook just in terms of what might happen over the next sort of day or two, and like I say, there'll be a lot of anticipation on that CPI news report coming out a little bit later in the week. Okay. Looking at GBP then, let's take a little look at how that is looking. So first of all, we'll just go to the weekly as well. Once again, similar kind of situation here. We'll just zoom out a little bit so we can see. So on the pound yen at the moment, you can see we very much got this sort of double top little rejection area at the moment here. Again, you know, GJ doesn't seem all too happy trading for too long above this sort of like 1970 area. You know, we got up to sort of like 1972, going back to the very last day of October. And again, we tried to push above there on the 1st of May. But again, you know, kind of apart from that, it's not overly keen trading above that level for any sort of period of time. So what we're likely to see, again with the idea of if gold being the safe haven, remember the Japanese yen is also classed as a safe haven. Now based on that assumption, what we might then see in a weekly sort of time frame would be another rejection off of there, which is what this top wick looks like. It might be forming on today's weekly candle, being Monday the 8th of May, and we might see a little rejection coming back down to the next sort of like area of resistance / support, which could be all the way down to 165 potentially. Okay, so that might be one thing worth looking at. Now if we just go down the time frames here, so looking at the weekly first, the daily first of all, just adjust our zone ever so slightly, so you can see we've kind of got another little area just around here, which looks pretty good. Just make sure that's nice and neat. So we've kind of got ourselves in this little sort of like daily range at the moment, and we're just waiting for a breakout. Now like I say, I don't think it's all too likely that we'll get a break and push to the upside. I can't really see that being the case, to be honest with you. It's possible we get a little push out, but I think we would come straight back again, and again that would depend on what news comes out like. Now bear in mind, on Thursday morning we have the interest rates on the British pound being released, and that is forecast to go up by a 1/4 point again, so a quarter of a percent to go up 25 base points there. So I think it is likely that that will bring a bit of volatility to the market. We don't seem to get the good strong pushes that you see with gold on the UK interest rates. So what we'll likely see is we might get a little rejection before that point. That'll give us a push to the upside, and then again, depending on what the US dollar news comes out like and so on, we may then get a little push back down. Who knows? But what we've got to take into consideration here is just, you know, the sort of like higher time frame that we have been uptrending on the daily. So if we look down to the bottom here, we had this sort of area of support formed, and we've basically been pushing up on there since the start of 2023. We've been in this sort of general uptrend with GG. Now if we just kind of go down the time frames a little bit onto the hourly, again you can kind of see at this moment in time, so going back to Thursday, we've just got this sort of like little uptrend going on. So if we just start down at this area here, and then you can see you've got the kind of idea of like a little higher high, just very slight little higher low coming down to that area, again higher high, and so on, just so you can try and kind of spot the trend. Now what we would basically be looking for there, if we look on the hourly time frames, we've just got this little sort of area coming around about here. So just try and kind of neaten that up a little bit. Now it's not the cleanest zone underneath there, so what you'd probably be looking for at that point is, are we able to come underneath this area and just double check that is definitely now going to form as resistance? And if we did, we've got that whole sort of area to the left hand side to potentially fill, and that would be a good starting point for that catalyst for a move to the downside. Now to the upside, again, it's not the cleanest of areas. Now we would have to take into consideration this whole zone we've got around here. So we potentially say, well, you know, certainly today being Monday, if we got a little break of that area, we'll just again come down to the smaller time frames that I trade from. So again, if we got to that area, which looks like it's nice support over there as well, we may short term be able to get a little break, retest into the upside from there, potentially for 100 pips or so, or something like that. But once again, you know, it's very much going to be determined on news this week and what that news comes out like. And, you know, a lot of people say, well, don't trade the news, trade the charts, etc., etc. But the fact of the matter is that you're going to get those whipsaw reactions. So don't try and guess what the charts are going to do. Wait for the charts to make their move and just trade with the trend with that. Trade your normal strategy. And if it doesn't fit your strategy, the trade isn't for you. You can't say that you've missed out on, you know, oh, I've missed that 300 pip move. You didn't. It wasn't your move because it didn't meet your strategy. So stick to your rules. Trade safely through this week, folks. We'll see what this week's got to offer us. There's some big news on both the dollar and on the pound, so it should be a pretty interesting week all in all. Remember, if you've got any comments or anything, feel free to post them below. Any questions, I'll get back to you as soon as I can. Please check the description as well. It's got all the links to all the different things. Feel free to get a discount code for your risk management strategy using Magic Keys. There's a link to my broker if you're looking for a broker which offers almost raw spreads, pretty much as good as you're going to get out there. And there's a few other little links and discounts, and if anyone wants a little one-on-one, there is also a link for that as well. Okay, have a great week, folks. Have a good one. Feel free to join my free Telegram if you want daily updates, daily outlooks, and little notifications if I'm looking to enter a trade and so on, and you want to try and see if it meets your strategy. We also have a free little chat group if you want to join that community and share your ideas on a daily basis as well. Okay, have a great one, folks, and we will see you again really soon. Take care.